The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Nice to have you with us this evening in the Northern Hemisphere, and good morning to our friends in the lands down under. Might even be good afternoon in New Zealand now. So, Sage, hello, Brian, good morning to you. Lots of our friends here today. How's that sound for you, Sage? All right? Everyone happy with the sound? Can you hear me all right? Okay. Nobody's saying anything yet. Okay, there's Sage. I've got it. Sage is my trusty helper. Terry's not with us today. He's doing something or other with his children, and Sage is a great support for me. So I thank you, Sage. That's good. Well, folks, today I'm going to talk to you about numbers, and I've called this webinar the Nameless Dread, because I know that most people are frightened of numbers and try to avoid them. And if you're one of those people, you're doing yourself a great disservice, because numbers are central to the Daniel Code. I say often that all markets turn at the Daniel Code numbers, and so far as I know, they only turn at Daniel Code numbers. If you'd like to test that proposition, you can go to the Daniel Code website and look at the chart archives, and there's something north of 30,000 charts in there that I've created over the years, so you can test that proposition for yourself. But if I say to you that markets only turn at those numbers, then it's absolutely vital that you know what those numbers are. And if you don't, and very few do, we're a very small business, and the Daniel Code is not something that is universally accepted. In fact, it's very hard for most people to accept it even when it's taught to them. We had some wonderfully amazed faces at the LA tutorial, which I did last month at Manhattan Beach and El Segundo, and to see the amazement and then the delight on people's faces when they start to understand this amazing thing is really a great joy. So we've just got a couple of shots here on our PowerPoint, which are a little bit out of context, but this is a chart I wanted to show you because I had a client say to me the other day that he'd been talking to a friend about the Daniel Code and saying how amazed he was that these charts all turn at Daniel Code numbers, and how great the trading's been really pretty much all this year. The last 2 or 3 months have been quite spectacular. And the friend said, well, you know, he probably just cherry-picked those results to show you, which, of course, is nonsense. All of you see the signals every day, and you know whether I've posted them or not. So apart from the fact that we don't do that sort of thing simply because we're not that type of people, but from a practical point of view, we simply don't need to. This markets have been turning at these numbers forever, and certainly in the 28 years that I've been building on the Daniel Code. So you just see this again and again. What I wanted to show you here, I'm going to start by talking to you today about the blue line trades, but I wanted to show you some of the trades that are very close to being a blue line trade but actually don't qualify, which is why they're not posted. And what a blue line trade is, it has a number of characteristics which you can see quite simply on this chart. We have 2 stochastics, a fast stochastic and a slow stochastic, and we have a proprietary momentum indicator. And you can see here this market ran down almost exactly into the Daniel Code number. This is the S&P E-mini, incidentally. Almost exactly into the blue line, and the fast stochastic was oversold, the slow stochastic was oversold, and we had clear divergence on our momentum indicator. That is, the chart made a new low, a new price low, but the momentum indicator did not, and that's the classic definition of divergence. However, that was a plus signal buy. We have blue line signals, plus signals, and TO3 signals. In all respects, it was a blue line buy, except that the close was greater than the open, as you can see here. And that means that that turn was already in place, and that stops it being properly described as a blue line signal. But it has all the other characteristics, so we expect it to act much the same, and it does. It has a nice rally out, a couple of bars back to test support, off it goes, and then it gets up here, and it runs into this black line at 2119. And the black line works differently to the other Daniel code retracements, because not only does it work on the bar high-low as target recognition, which you see right here, but it also works on the close. And a close above the black line would have implied that this whole swing, which starts from up here, would be violated, and this market would go up considerably further. The fact that it would not close above the black line gave us a very strong clue that a correction was about to occur. And even though we have a blue line just above this bar, this does not qualify as a blue line trade because the high of this bar is not close enough to the blue line number. And basically, we're looking for target recognition within about 1,000th in this case. So plus or minus 2 points, no more, and that didn't make it. But we still got a signal. We got our TO3 signal, and down it came accordingly. And you can see the next characteristic to look at with these numbers, these red and black numbers you see down here, these are the Daniel code support and resistance numbers. They're preset. They come in a tool, which we provide to all members of the Daniel code, and it's free. And by using that, you can just create these numbers with a click of the mouse. And you can see how absolutely precise this is. So this first bar down here absolutely nailed the 2099 retracement. The next day, which is today, absolutely nailed that 2092 number. So it's telling us that it is correcting the swing. And you'll notice it's not correcting the major swing. The major swing goes from this high down to this low. And in fact, what it's correcting is what we call the penultimate swing, which is the swing before the final swing, from that high down to this low. And it's very, very precise. You can tell using this tool exactly which of the swings is being retraced. So I just wanted to share that with you while we move on to the main topics, and show you our compliance statement, which we're required to show you. I do suggest you take it all seriously. Trading when you have it right and you're very good at it is absolutely fantastic. You can make more money than any other legal activity that I'm aware of, but if you're not doing it the right way, you can lose a lot of money very quickly. Here's the page for any of you who are interested in having a free trial at the Daniel Code. We don't do any marketing. We simply say that you're welcome to have a free trial of any or all of our products, and make up your own mind whether what we have is suitable for you. And you can just follow this. There's a free trial banner on the website at www.thedanielcode.com, and you can register there, and then just contact Terry at support@thedanielcode.com, and he will be happy to switch on any of the Daniel Code products that you would like. So now we can get our way out of there and we can start taking a look at this. So what we've got here is this is the Euro AUD chart. I've used a future chart, Forex chart rather, to show you this because I don't want to get involved in all the rollovers that the futures charts have. It would mean changing screens quite a few times. And if we use a Forex chart, then we avoid that problem. But all markets trade the same on the Daniel Code. And what I wanted to show you here was a long run of Daniel Code blue line signals, which we trade banging the blue, we call it. And this is a chart that runs from September, beginning of September, September the 4th, 2014 to date. So in regard to that comment by a friend of one of my clients that, oh, look, he just cherry picks the results. I wanted to show you a complete, this is a nine-month spread of a major market, and show you all of the blue line trades in here. So the blue line trades have these characteristics. You can verify all of this for yourself. We need to have the fast stochastic oversold, as we do here, the slow stochastic oversold, as we do here, and we also need divergence on the CCI. As you can see there, there's a considerable divergence. By the time that bar's finished, we go back one bar. You can see just where this cursor is, that we've got divergence. The chart has made a new low for the move, and the momentum indicator has not. That's our definition of divergence. So we get a great blue line trade there. Off it goes, runs up here, and we get another blue line trade here, and this one fails. We do have failures. That's called reality, and you should be able to verify each of these trades pretty much as I move along. Then the market rallies up to this number here, 14703. We were looking for the number at this high is 14705. That's well within our tolerance of 13 or 14 ticks at this level as the thousandth. And that's actually a retracement running from April 2014. And we're now up to October 2014. So some of these retracements and blue lines last for very, very long periods. The market switches in and out of various sequences, but we pretty well know by now what they all are. And you've got a TO3 sell there. Down it runs into this trade right here. It has a low of 14314, this bar. 14222. So that's 9 ticks away from our number, and that's well within our tolerance. All the other conditions are satisfied, so we buy that, and up it goes. Up at this high, you get the same thing. You can check as we go along that both the stochastics are overbought, that there's divergence on the CCI, and down it goes. Right here, we have another blue line buy, and this one failed also. You got little 2 bars up, and then it failed, and that's fine. If you know how to trade, you're equally happy if it fails. You know where the failure point is, and you get short and you get all the money back in one bar. These are daily bars. Over here, excuse me, this is a delayed blue line trade. I want to show you these ways this blue line trades manifest themselves. That this is the bar here. This is the the momentum low. That's the lowest close of this move down, and this met all of our criteria of the stochastics being oversold and having a divergence on the momentum indicator, but it hadn't yet reached the number we were looking for, 13970. The market rallied 4 bars, 5 bars, and then dashed down with huge momentum to get to that number. Now, I was talking to one of my clients the other day who was very keen on talking about the fact that markets exhaust themselves at turns. That's an old-fashioned view. They don't exhaust themselves at all. They're actually rushing to keep an appointment because what we say is that when time and price are squared, a turn is almost inevitable. And as I'll show you when we finish this quick run through of the prices, we'll start looking at the time when these turns occur. What happens, in fact, is that markets inherently know where these time cycles are and where the price numbers are, and they're like magnets. And the markets have to go there, and you'll see some more examples of that as we move along. So rather than being exhaustion, look at this little run up here. That looks like a big bar that a normally trained trader would say was exhaustion. It's nothing of the sort. It's the market hurrying or rushing to keep its date with destiny, because that's the point at 14893 where time and price will be squared, and the market is in a hurry to get there. I know it's a hard concept to acknowledge that markets actually know these numbers. But if you look right beside that 14893, there's a black line, 14886. The high of this bar was 14895, which is just 2 ticks away from the actual high of this bar. And that Daniel Code black line retracement was set in April 2014. And here we are, February 2015. And this market still ticking off those Daniel Code retracement numbers, as well as the blue lines. So there's your next blue line trade. It runs down here, gives you a very, very classic blue line trade right on this bar here, which is 0313. Hits the number. We're looking for 13734. The low of that bar is 13725, 9 ticks away. Well within our 13.11 thousandth that we permit there. And both the stochastics in the correct position. Momentum divergence, off we go. Up here we get the same thing. We get, at this point, we have our compliance with our 2 stochastics overbought and divergence on the momentum indicator. And the high of this bar is 14392. We're looking for 14388. On the next bar, this little inside bar, the market puts in an inside bar. That's usually to waste time. When the market's a bit early in its move, it will create inside bars very often as a mechanism to fill in time. But while it does that, it puts its high at 14389. That's just 1 tick from the blue line to let us know it's aware of this number and is tracking it. And then the next bar, of course, you get the key reversal bar. It's not actually, it's just a snapback reversal, followed by the fast move down. Down here, we get, as we move along, we're looking for 13699 was our blue line in closest proximity to the market here. We get a great hit on the on price with the low of this bar being 13705. That's just 6 ticks away. We get a great hit on price, but we don't have the required setup in our stochastics. So this does not become a blue line trade. And this market marches on because time has not yet arrived, and I'll show you that in a moment. And eventually you get this push down here, which just breaks the Daniel Code number by a couple of ticks. It also manages to collect all the stops. Everyone else was long around here with their stop under this bar. They all got their stops taken out, threw their hands in the air in despair, and once the market had got them wrong, off it goes and does its thing. And here's its next time and price at 14359. This is just market's just 5 ticks away from that number. Stochastics lined up, momentum. You can just check all this for yourself on this chart. And of course you get the reversal there because time and price are squared. Down here I've just put on a small number of retracements here. I was showing a client the other day how accurate these numbers are, that we get a rundown, we get a little break of our red line there. That's the 59.3% retracement. We get a further break and key reversal bar there. And you know, that looks good. You say, yeah, that's target recognition, close enough. But it's not. And look what happens here. You subsequently get this bar here with a low of 13950, just 4 ticks away from the red line, before this market's prepared to take off and run up to this high, which is also the next of the Daniel Code blue line trade. So these are vital trades to have. The numbers are posted on charts for most of the markets. Let me just show you here what you have. This is the Daniel Code website, and in here you have the various charts. So you just click on those from the drop-down menu. That will open, and here's the chart of the Russell. As you can see, this was very nice target recognition back here, which would have been Tuesday. That would be Wednesday. That would be Tuesday. That's Wednesday. Thursday's bar isn't on here yet. It's down to about here. but you get these posted twice a week. And let's look at another one for you. Here's the gold chart coming up, and you can see that these markets just track these numbers all the time, and you just take these blue lines and put them on your own chart, and you use your Daniel Code retracement tools to create these retracements. So that's how all of that works. So these numbers are created for you on 9 Forex charts and 11 futures charts, and they're updated twice a week. But for the markets that don't have the charts published, and the ones that do, I create the signals for you anyway. And once we've created the signals, for those of you who are new to the Daniel Code, let me show you. You don't have to be frightened of this stuff. You simply go to this document here, which is called the Daniel Code Trade Program. You type in your account size, whatever it is, and the risk you want to take. Click the button, and this program will open, and it will tell you all the signals that are valid for today. It tells you whether it's a buy or sell. It gives you the exact number to enter at and the exact number to put your stops at. And in here you can put in the number of contracts you want to take, and it will calculate for you the total risk if those trades are elected, meaning if they get to this number. Signals are meaningless until they're elected, and only a little more than 50% of signals are elected. So that's the final clue we have, that we don't suffer from hubris and say, we've done all this great analysis, now we're going to buy on limit or sell on limit. That's the quickest way I know to go broke. We actually wait for the market to confirm it to us by making the turn and going to this number. And if we're selling, we'll be selling just below the low of the setup bar, and vice versa if we're buying. So we always need the market to confirm what it is we think is going to happen. So the most we can advance is once we've lined up our numbers, our various studies, and these are just the price studies. There are also time studies we use. Once we've lined all that up, we then say we have a high probability now of a profitable trade if the signal is elected. And the market then needs to move to that number to confirm to us that the analysis we've got and what we think is likely to happen is probably correct. So that's how that works. Now, we talked about time and price being squared. What that means, that's actually a phrase that W.D. Gann invented, and he got it from a gentleman called Stefariel, who was a doctor in London. And those of you who follow Daniel Code and my webinars will have heard me talk about this before. And Gann invented it, and I've adopted it, but it's entirely different to the way Gann used it. Gann used it for what he called his support and resistance lines, and they were 1 by 1, 1 by 3, 1 by 8, etc. And they did not work. So he had a nice turn of phrase, which I've adopted, but nothing else from Mr. Gann is useful to real traders. But time and price being squared means that doesn't mean that it's on any line, doesn't mean it's on a 1 by 1 line or a 3 by 1 line or any of that nonsense. It means that price, right here, let's look, is at a recognized Daniel Code number, and time is also at a recognized Daniel Code number. So let's just start with this low in here. Remember, this is valid for plus or minus 1 period, and the first number out is 29, which is just going to be in here, and that's not close enough for us. The next number is 37, which is there, gives us nothing. The next number is 44. It's a couple off where we want it to be. The next number is 59, which is on this little 2 bars past the swing. Let's get this on the right low. It's there. Let me just run that again. I was on the wrong spot. Here's the low. It can be the low or the closing low. Either would be valid. So there's your 29 nothing, 37 nothing, 44 nothing, 59. 59 gives you a minor swing, not enough for me. And there's 62, the next number in the Daniel code. So you have a Daniel code number at a reasonably important swing, at least a clearly identifiable swing. And you have price at the Daniel code number here, 13790. And you have time, one of the Daniel code numbers. So that's the meaning of time and price squared. And we need to be able to see an identifiable number and identifiable time. Let's move on and do another one. I won't do all of these, but it really is important that you understand this concept. So we're running out from that next low there. We'll just run through the Daniel code numbers. There's 29. Next one is 37. Next one is 44, which is this little tiny swing there. Next one is 59. That's one off a major swing. Next one is 62. And there it is, smash on a important swing there, or at least a clearly identifiable swing. So you'll see I'll do one more for you. You can take my word that these all have a recognizable you can take my word that all of these blue line trades have a Daniel code time cycle corresponding to them. Let's run this one out. There's the 29.6. Could be 30. Bang, you didn't have to go far. There it is, the very first swing. 29.6 is there. That meets our criterion because I put this on the wrong line. As you can see, it's moved one. It should be on that bar. Now the 29 is exactly at that swing high. So you can see how easy this stuff is, and make it even easier for you. You don't even have to worry about that because I do it for you. All of these signals are checked for time cycles. Let's make this our last one here because this is just repetitious. There's 29, nothing happens there. 5, 6, 7, there's 37, nothing happens there. There's 44. Okay, there's 44 right at the swing. It's as easy as that, to prove that all of these turns, and you can see yourself, this is the swing we were testing right here. You can see for yourself that these stochastics are both overbought. We have divergence on the CCI, and we have not only the blue line, which I create, but the black lines which you could have created. So you can see that this is time and price squared, and there's frankly no way of fudging it. You can have a high degree of confidence in these blue line trades. So we have about 14 trades through here. We have 2 failures. That's reality. Some trades do fail. If you know how to trade, that shouldn't concern you because you'll find that pretty soon the market gives it all back to you. This was a failed trade here. This was a blue line trade. You got a key reverser bar the next day. The trade got elected on this bar here, and then it rallied up weakly, came back off, and down it goes. Now, the failure point is right at this little low here. That's the swing low that sets up the trade, right at that low, which was 14365. So we can have 14363 because our failure point and our stops are 2 ticks underneath the swing. So if you got that's the failure point. If you knew that, you were short there, and this market gave it all back to you in just pretty much one day, which was nice. So that's the blue line trades. I had a few others I wanted to show you in the sense of getting you to think about what you can learn from the numbers in a trade. So This next chart you're seeing is another Forex chart. This is CAD Chief, and what I want to show you here was how you can find the operating swing, why that's important, and what it'll tell you. Now, if you look at this price structure from the little high here on 06 and 11 down, you can see there's actually two swings there. There's one swing that runs from here to this low. I'll just cut this fellow off here so he doesn't wander all over the place. We can tell him we don't want any extensions, thanks. That's one swing, and this is the second swing here. Same thing. I should have cut him off a bit too. And you can see that there are two separate swings here. This market has come down, gone up, come down, gone up. So this is one swing, this is the second swing. This major swing is called just that, the major swing or the dominant swing. And we have a number of swings in here. This happens to just have two. And this swing before the final swing is called the penultimate swing, meaning it's the swing before the ultimate swing or the swing before the final swing. And by using your Daniel Code tools, excuse me, particularly this little fella here, who's called Dan the Hedgehog, you can tell which swing is being corrected, and that's important, as I'm going to show you. So if we take this tool and we just drag it from the high to the low, we get those retracements there. And nothing is hitting, nothing's very precise here. This bar just wanders through and closes nowhere, and this closes nowhere, and this actually puts a low on that 75.26 number, which is encouraging. And the next one bar closes on the 75.37 number, as does the next one, but this first move out is very, very sloppy. So our alternate to that, if this is not the swing that's being corrected, then it must be the penultimate swing that's being corrected. So we can use the same tool and put our swing, our retracement tool on the penultimate swing. And when we extend that, we can see a very dramatically different picture. We can see this first move down, 7516. The low of this bar is 7516. Then we get this little rally up here, and we get a push through here, and we get a low of 74.91, which is only 3 ticks away from this red line number here. Little rally up, and we get this big push down here. Now 74.62 was the Daniel Code black line number, as you can see, and the low of this bar is 74.62, exactly, precisely to the ticker. So it is screaming at us that this is the swing it is correcting. Now, if it's not correcting the major swing, it means that the market is stronger than it appears to be. If it's correcting a swing before the major swing, then that's telling you there's more strength in this market that's implied. You remember a few moments ago I was talking to you about the particular characteristic of the Daniel Code black line retracement, that it works on bar high lows, the same as the red retracements do, but the difference is it has some special characteristics about where the market closes in relation to it. And a close below the black line, this is the last support of the swing here. If it closes below the black line, there's a very, very high probability that the whole swing is going to go. In other words, that this market is going to continue lower. The fact that it hits this so precisely and tells you exactly that it is tracking this black line is what sets up the next buy. So you get this little bar here, and then we issued a buy for this market for the next day, and whoosh, off it goes, a little inside bar, a bit more. So there's a a not big, but all trades are nice trades. And from our election point to today's close, there's 500 odd bucks per one mini contract in here, which is pretty nice. But it was only the black line. Whilst we do have our fast stochastic oversold here, this is not enough to create a trigger. I can tell you there wasn't a time signal there. But nonetheless, we posted that as a plus buy signal for you. And that's why, because of its interaction with that black line. So knowing the numbers gives you an entirely different perspective. If we, take this stuff off that we've done, well, it's just another retracement, and it doesn't go to any known retracement number that you, if you're classically trained, and by that I mean badly trained trader, could see. But if you have the Daniel Code numbers, you can see that in a very different perspective. I wanted to show you something else about why you need numbers. This is Euro AUD, and I wanted to show you here the hook trade. This is a very important part of trading that we got up here. This is Euro AUD, and we got some sort of a sell signal. I forget what it was. It was probably a TO3 signal on June the 10th. I can probably even find that conveniently here and see what we were looking at. Euro AUD was a sell, was a TO3 sell on this day here. So this was a TO3 signal, so you got short. And then you got this rally. Now, this is called the Daniel Code hook trade, and it has some very specific characteristics. It's this 1-2 pattern, 1-2. Now, don't bother counting waves. This is the only part of anything remotely anomalous to Elliott wave that works. I don't want to offend people who are into Elliott wave, other than to say that I think more harm has been done to traders and more money has been lost with this Elliott wave nonsense than anything else I can think of. But there are some people, and some very good people, who swear that they understand it. So to them, jolly good luck. I don't, and it's never will work for me. But when you see this 1-2 pattern, this is very common. And what happens with it, you should be looking for this at all turns. This was obviously a fairly important turn. It was a TO3 signal, was right at a blue line. And what we're looking for is the retracement back up. So down here you can see, here's our hedgehog. This is Dan. I've actually got a picture of Dan that Sage sent me. Let me see if I can find it for you. Sage is a carer of right. Let me see if I can just pop this up for you that she sent to me. Here it is. Here's a picture of Dan. And Sage rescues hedgehogs and looks after them. She's a wonderful lady. And here's a picture of Dan. It's Dan the hedgehog. He's our guy. So thanks for that, Sage, our little mate there. Anyway, moving on. What we're looking here for is the retracement. So we use this icon over here, Daniel Code retracement it's called, and we put it on this swing here, which is the last operating swing there. Have a look what happens. Okay, you get a little rally up, tells you it's probably tracking this. This is the bar, these two bars are the bars I'm interested in because they've gone exactly to the Daniel Code black line. Let's just clear some of this stuff off so you can see this quite clearly. This is an important concept in trading. 14732 is the swing. That's the rally up. We're looking for the rally back up to give us this 1-2 characteristic. It's from this low to this high. 14732 is the black line, Daniel Code black line at 89%. And that, to me, I'd have said, you beauty, that's a target recognition, but it wasn't precise enough for this market. So it went and had another go at, it's yelling at us. The high of this bar is 14732. The number we're looking for is 14732. So this market, if you understand the Daniel Code is screaming at us, guys, this is a hook trade. And hook trades will go to, sometimes they go to 74. The most common number they go to is 89, then 100, and then 114. And they're very, very, very precise. So whenever you see this, it's a setup for a hook trade. You want to take the sell because it's usually very rewarding. And you'll get a bigger than average bar, and you might even get a nice multi-day rundown. So there's the hook trade. Here's getting some nice commentary from the boys here. Brian Coleman's having a great time seeing all this. I just met Brian at the tutorial in El Segundo last month, and he loves this stuff. Matt's saying, I followed Euro AUD myself. Thanks, John. Great to see you use this as an example for hook trade. Yeah, it's very rewarding, Euro AUD, of course, we're talking about. Yeah, it's a happening thing. So there's your hook trade. And the last example, so you need to know the numbers. If you didn't know the numbers, then you didn't understand this was a hook trade, and you were no chance of getting this nice trade down. So, you know, when I say you're frightened of the numbers, don't be, because they're all built into the programs. Either I do them for you and post them on the website, or the Daniel Code tools will create the numbers for you, and it's just click and drag, that's all. Okay, I had one other chart I wanted to show you, again, talking about the numbers. This is a futures chart. Remember, all markets trade exactly the same on the Daniel Code, and this is DX, the US dollar index. Here was this was a buy signal. Might have been a blue line. I don't recall. The actual number charts are on another computer, so I've had to transpose them here. Anyway, this took off. We've got a lovely rally all the way up here, right up into this high here where we got a sell, and there was the sell. Now, this is another example of the Daniel Code hook trade. Let me take this off and show you what I'm doing. As soon as you got this bar up, it could have been a continuation of the upward trend, but the other thing is it could have been a hook trade. And you test that proposition by using the Daniel Code retracement tool. Put that on there and look at the numbers. This is another instance you need to know this numbers, because if it's going to set up as a hook trade, it will be very, very precise, and it will hit usually the 89%, which is 98,175. The high of this bar is 98,165. That's actually one tick away. I know they've changed this market so it now trades in 3 decimal points. They've added a half to get more people trading it, but it's the old one tick, or 2 if you want to use the half designation at the end. Either way, that's superb target recognition, and that tells us to be ready for the hook trade. And that was the only signal you had to sell this. 1 bar up, down it comes. And as I said, you very often get a bigger than usual bar on this hook trade, because the purpose of the hook trade is to get everyone else wrong. What markets do, and you'll see it down here. This was a buy signal right here, and look what it did. It turned around and scared the pants out of everyone. Nearly everyone bailed out of the long side of that trade, and once the market had got rid of 99%, off it went. 1, 2, 3 gave you a nice big trade up there. 1 day counter trend, and then another 4 bars up. Whoosh, plenty of money in that. And that's what happens in these hook trades. They're designed to get the vast, vast majority wrong. And once they've got the majority wrong, then it will reward those who know, which are our Daniel Code people. So there was the hook trade. And I wanted to see, so there's a 1, 2. There's that typical 1, 2. Here's the same thing here, 1, 2, up and down. Here's the 1, 2, down and up. Excuse me. And then I want to show you a slight variation of that on this low here. This was a TO3 buy. It wasn't a blue line buy, even though it had found and bisected the blue line target. Why did this market run through the blue line number? Well, to get the stops, all the stops. The swing traders, all the long-term stops are below this low here. and that's why this market punched through to find liquidity and get all the stops. It was only there for about 3 minutes probably. Once it had gathered all of those stops, whoosh, it was on its way. So here's our 1-2 pattern, and we get this market going up, and let's see what happens. You get was something I wanted to show you here. I'm trying to remember what the hell it was. Let's see if this gives us any indication. That's the one up, and it's, I think, there it is. There's the retracement down. This is the retracement from this high to this low coming down. And as soon as we thought this was a high, which would be on this bar, we put on this retracement. I'll just find the spotlight here to make it clearer for you. So this is the last operating swing from this high down to this low, and that's where we put this retracement that you can see now. And look at this market as it moves out of its hook trade. It makes it lower this bar. I need the other tool to read that. Bear with me, folks. It makes it low at 96.105. At 96.10, we get rid of the halves, against 96.13. The next bar closes at 95.89 against a 50% retracement of 95.86. So this market is starting to tell us that yes, it's tracking this retracement series. The next bar closes at 95.88 against 95.86. The next bar has a little rally up. You'll see that'll be very precise. Your swing now runs from this low, if there is to be a retracement, up to this high, and you can see it's in the middle of nowhere. It doesn't look much, does it? It doesn't look neat enough to me. That's not what we'd expect. So we say, okay, there's actually two swings here. That was one swing all the way up to this high. But look here, here's the penultimate swing. And we just talked about that a minute ago. And what happens if we put our retracement onto the penultimate swing, which is the other alternative? Excuse me, now these retracements are making sense. 97.365, and it's put its high at 97.34 against 97.36. 2 ticks in the old language for now that they've added the halves. Close enough tells us that yes, that's what it's retraced. So again, exactly as we saw on an earlier chart, if this market is only retracing the penultimate swing, and it's not even making an attempt to retrace the full swing, correct the full swing, which is back here, then this market is weaker than it appears. I showed you this in another chart. So you had to get short there. Down you go, down you go. A little bit of a rally. This bar here tells you with its low exactly 94.66 against 94.69. It's telling you it's still tracking this market here. Go across. This bar opens at the same number. This bar opens at 95.415. The Daniel code number there is 95.415. Tells you everything's on track. Down it goes, down it goes, down it goes. And then it does this. It does this little break below the blue line, which sort of gets you a bit confused. It's certainly nowhere near enough to be a blue line trade. So then it rallies, and look what it does. Here are the numbers. If you didn't have them, this made no sense to you. This bar here rallies, and it hits 94.695. The Daniel code number, this is the 74% retracement, 94.690. Now, what often happens with these numbers, and you'll learn to love them, is that when they ignore a number, as this bar did on the downside, it just ran straight through it, it will often retest it again from the other side, which is what it's done here. Now, remember, these numbers that are on here, this is the retracement from the high to the low. And this bar here tests that number from the other side, from the low. More importantly, here's the next bar, and it's sat right on the black line, which is at 93.975. 93.97. The low of this bar is 93.99. Again, 2 ticks or 4 halves, whichever you prefer. But it's telling us, it's screaming at us, I know what these numbers are and I'm tracking them. And that was the only clue you had to buy this thing, which is why we posted a buy signal for this market on June 23. So it may sound confusing to you, but I promise you it's not. And if you take this off, in fact, if we hide all of it, if we get rid of all the annotations, none of this makes any sense. It appears to be random, which is why the Nobel Committee awarded a Nobel Prize to a couple of bright young tech guys at some university who did a paper proving, quote unquote, that all market moves were completely random and not in relation to any other previous market move, which, of course, is completely wrong. All of these things are already baked in. If you have the right tools and you understand how and why markets move, then it all becomes very apparent. So, excuse me, rather than this looking random and haphazard, we can hopefully light these things up again, and they'll all come back. And there you are. You can see how precisely this market, nothing random at all, absolute precision. And then when we got this little rally here, it tested the 95.86 from the other side. And then we have 2 inside bars, both from closing as close as they possibly could to the Daniel code number of 95.41. So this is the extraordinary accuracy that you get from knowing these numbers. And if you don't have these numbers, fame at the University of Chicago, okay. If you don't have these numbers, you're never going to see this stuff. So I do urge you to get these numbers from the Daniel Code website. I urge you to study them. If there are things you don't understand, email me. I will respond to them either in an email or I'll respond to them at the next webinar. But, you know, it's in my interest for you to be very good traders, just as much as it's in your interest to be very good traders. And you're not ever going to be very good traders until you embrace these numbers. Because they just tell you so much. And this is just another form of a hook. This is what happened with this 1-2 pattern. It's telling us something entirely different. It's using a different retracement sequence, but it's using exactly the same number there. Okay, so I hope you see that, because this is vital stuff to get you to be very, very good traders. And I think that's probably about all I had for you today, folks. I wanted to try and get this through to you, that these were there are the blue lines, the red lines, and the black lines, all of which is on the website for you. I do it for you. You can learn from that, and eventually you'll be able to be putting on your own numbers and seeing your own trades. But don't be frightened of numbers. They're not the vendor. They're not men dressed in bear's clothing. They're not going to harm you. These numbers, these very special Daniel Code numbers, are gifts. They're there to let you understand and see what markets are doing and give you a high probability forecast of what they're likely to do. And once you have that, all of this stuff comes alive for you. The fog disappears. The, I don't know what to do, disappears. All of a sudden, you can see markets very clearly defined, very, very accurately. It's the accuracy of this stuff which is amazing. I mean, you simply look at this, these 2 bars here hitting these 2 numbers, and you say, well, there's June 21st and 23rd, 22nd, 23rd. It's this number back here on May the 14th. That you had to know to be able to draw that retracement properly. So these numbers were baked in the bread, or the chart at least, from at least the middle of May, and probably a long, long time before that. These patterns just repeat. They go on and on. There are not that many of them. It might seem overwhelming at the moment, but once you understand them and you've seen them a few times, get that burnt into your brain. There's not that many different patterns. The great beauty of trading is that we know what the various patterns are. We can describe them and more importantly, we can measure them. And if you can't measure them, there's never any action. So it's the ability to measure these market moves and understand what the charts are telling you. The charts are screaming at you what to do. They're really just trying to give you gifts and money, but you know, it does require you to make the minimum effort to learn what the Daniel code numbers are to get them on your chart. If they're just sitting on the website, they're not doing you any good. You need to get those numbers and put them on your charts, and you need to talk to me about them or follow these various webinars where we show you how to excuse me, how to interpret all of these. Okay, so that's about all I have for you today, folks. And let's see if there are any. See if there's any questions here. There's lots of comments from everyone. That's good. Everyone's happy. They think this is great stuff. Price recognition, yes. Scott Lewis now overbought. Yeah, up here it is overbought, Scott, on this measure here, and you had target recognition. This, incidentally, is just a phenomenon we're seeing. This is not the retracement, these numbers. That was the top-down retracement from here down to this low. What we'd now be doing, of course, is putting on the other set of retracements. And we've got a number of swings in there. There's the first swing that we could use. Here's the penultimate swing, which we could use. And here's the final swing all the way up. And at this stage, this one looks the best. But you could put on all three of them if you like. And it will, in a matter of days, it'll tell you exactly which particular swing it's tracking. That's Scott, Brian, Matt. Yeah, thank you, Matt. Glad stuff. The Daniel code is indeed the DNA of markets. Okay. Brian. Okay, I'll Skype you when this is over. Sage, thank you. Excellent webinar. Never cease to be amazed. Very sunny day in Wellington. The Harleys are calling, just like the DC numbers do. Must be time for a Bloody Mary. You've done enough from Mellowpuff. Sage, it's I've been so busy this week, it's passed me by that today's Friday, and not only is it Friday, but it's almost 11:30 here at the Queensland's Gold Coast. So yes, I'm very close. After I finish a couple of conference calls, I'll be looking for a sip of the good stuff. Peter Norton, haven't seen Peter for a long time. He's a Daniel Code tutorial graduate in Wellington, New Zealand. Yes, good, Peter. Contact me. We're always happy to give you guys refreshers and what have you. Chase Withrow, I'd like to know about gold. So would Tony Di Domenico. And Bill, you're going to send me some. That's okay. Let's have a real quick look at gold, guys. Let's start with the weekly chart because I happen to have it here. Here's gold. It's just been consolidating, really, for a long time now. I know there's a bit of excitement about gold. People think it's going to break out and do wonderful things, and it may well do so, but it's not showing that on this chart. What it's showing on this chart is that this market is consolidating. As you can see, it's just been bouncing off the Daniel Code numbers. It's just been taking out the stops at the highs and then taking out the stops at the lows, making new highs, new lows. So there's really not a lot to say about gold other than if you stick to our trading systems. I mean, we've just been having an absolute monster run in TJ Mullane. Hi, welcome. Thank you. Thanks a million. I'm glad you were here with us today. I'm glad you enjoyed it, Mr. or Mrs. or Ms. Mullane. Don't know your first name, but thanks for being with us. Not a lot happening in gold, but the trading in gold has just been fantastic. I'll just see if I can access the daily chart, guys, on the other screen, so I can be a bit more definitive about that. I mean, I'm accused of not liking gold because I always say what a silly idea it is to hold gold. This is gold is right on the daily chart, folks. It's right at the 1166.90 black line. So if it's going to rally, that's a good place for it to rally from there. You can see that on the Daniel Code website. Let's bring that up for you, show you the latest chart in gold, which is in here. Here's metals. Silver's due to roll over in the next day or two. This might just be hanging around waiting for that rollover to complete. Here you are. Here's the 1166.90. We had an inside bar today. Same thing. Look at this. Blue line trade runs up to the Daniel Code retracement, down again, down to the Daniel Code black line. What it does in the next couple of days will be very telling. Remember, silver's not far off rollover, and it might just be waiting for that. Rollovers are great places for fast moves and trend changes to take place. Okay, there we are. There's the gold. 240-day, Tony. We don't use that anymore, mate. We've got much better ways of trading. If you come along to a tutorial one day, I'll show you how to trade gold off time signals. And I can tell you there's been one signal wrong in about the last 5 months. I did a big private coaching session with one of my clients the other day, and we found every buy, every sell in gold on a daily chart. The 240s were an early thing that I did many years ago. When I want to get close to the market, I'm finding with these time turns, which have been in the process of development for the last 28 years, they're absolutely lethal. They don't miss. So that's that. I look forward to seeing you along the way somewhere. So thanks for being with us, guys and ladies. There was one here. Timmy's here. It was Timmy I was talking to about gold. We didn't miss a trade, did we? And Sage, and I see that we have this Rolf. Marilyn's with us today, who we haven't heard from Marilyn for a while, but she's with us. So thanks, folks. That's it. Next webinar in 2 weeks' time for you. Excuse me, for you tutorial folks. There's a private tutorial follow-up webinar. Be the second of the 4 we're doing tomorrow, same time, so don't miss it. And I'll look forward to seeing all of you with us at our next tutorial for the Daniel Code group, which will be a fortnight from today. So enjoy your weekend, folks. I'm a bit closer to the weekend than you are, and I hope you have a great time. Bye-bye.